Hi everyone. Right now we're going to be looking at XLK. XLK is a technology sector index fund. And the reason why I like this idea of following indexes is because it's going to help us understand which industries are growing during today and the year. And so, if we can find an industry that's growing during the year, uh, so for example, this industry was booming from March 20 all the way up to like December of 21. It went from nearly 68 to about 173. It almost tripled in about less than 2 years. So what why I like following the indexes is not only could you invest in that index itself and see that type of return if you're able to follow it and kind of watch it grow for that type of time, but you could then dig into that index and find individual stocks that might exceed even that type of performance. And so I only have on my check sheet of lists of stocks to follow, I only have four of these types. I probably will add more of them just so we can get like a picture of more or less all products with while also focusing on specific industries so that we can kind of catch a specific stock and really kind of capture that rally of a 2x, 3x, 5x very rapidly. That's kind of the goal here. And so before I get any like further into the details with this one, if you have any opinions on say a sector that I should add, because right now I have two general ones where it's the top 500 called VOO, VOO. I have the top 100, which is Invesco QQQ, and that's the code QQQ. I have a semiconductor index, which is SOXQ, where it just follows the semiconductors. And then I have this one, XLK, for the technology. So if you have any sector indexes that you think would be good to begin tracking, please let me know in the comments. If you have any opinions on this and just a buy point, sell point on this, also share, and just kind of any news in general about this. So before I actually start kind of drawing our buy point, sell point lines in, I also want to share that for XLK, this is kind of the holdings for this company. You can see 20% is in Apple, 20% in Microsoft. Once you get below that line, then you have another roughly 60% of companies that are diversified between about less than 5%, clearly, because NVIDIA is the next one. That is roughly 5%. Then it's Visa at about 4. PayPal and MasterCard are the only other ones above 3%. And then we have Adobe, Intel, Salesforce, Cisco. And below that, then you're getting close to like 2% each. And it's probably a wide variety of stocks, even less than 2%. And as I have this uh, screen being shared, I'm also just going to point out here on the right side that I'm highlighting here. These are potential candidates of indexes that I probably will follow. So we have like XLY, which is consumer discretionary, XLV, which is healthcare, XLI, industry, XLP, consumers. You get the point here. There's a variety, and I might just stick with the XL type, I which is a spider type fund, SPDR. So I might just stick with that type, and we'll just kind of play it that way. Just again to get a general sense of an industry slash sector. And if we look over here, these are kind of the sectors that I'd be looking into following. We have basic materials, consumers, financial services, real estate, consumer defensive, healthcare, all these. If I could get like one in each of these, and again, I could get more fine tuned because again, I have like a semiconductor one. So I could get more fine tuned because semiconductors are I believe technology. That's the one that makes the most sense. Um, but they might categorize it as some like mixed thing where it's maybe like, it's, the more I look at it, it's definitely technology. But that would kind of be the idea: is have a index that follows each one of these, so we can see which one is growing, which one's falling, so we can kind of capitalize on maybe what's currently falling. So that, because most likely these things come in cycles, whether it's 3 years, 5 years, whatever it is, we want to catch one that's on the dip, ride it for a number of years. Once it peaks out, get out and move into the next index. Uh, but that's enough of that. Let's kind of look at this one today. And so we're just going to draw in a couple lines. We're going to draw in our what we consider to be our low point, which right now is 116, and the current price is 140. I'm also just going to add today's date on my tracker spreadsheet here on the right, which is off screen right now. I'll make sure to share that in a little bit. We do have a peak at 173, and in terms of a potential buy point on this one, I right now it looks like, and I'll make this line green. It looks like 123 is a good time to buy on this one. Uh, and I'm really just basing that off of it kind of acted as resistance for a couple months back here in 2020. It danced around it in late 2020. Then it kind of acted as a support line during like the first quarter of 2021. And then it kind of just shot off, came all the way back down more recently in June of 22, acted as support for about a month from June to July, and then it went below in about September of 22, did that for about 3 weeks till October, and then it came right back up, went below again in November, but came right back the next week, and then it acted as support where it looks like the tails of the candles did dip below, but it didn't stay there. Uh, I'm also going to point out not too much activity for this one. It does seem to be, it's about average. There's definitely points where there's a lot of activity, but overall, it actually might be trending below average now that I look at it. Uh, I'm not sure how well it's coming up on the screen, but I'm saying about like, I'm trying to make it so it's that date isn't in the way, but average I would say is right around like, if you can see it on the right corner, there's a $60 mark is popping up because of where my 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 mouse is, my cursor. But lately it seems to be selling at about 56, and this chart only goes down to 55. So keeping that in mind, if the average is about 60 and it's currently at about 57 and it only goes down to 50, it's clearly on the half of the normal, what I would say is like the average kind of amount of trading. But maybe I'm making it a little too high. Maybe I'm being too past, having too much of a pass bias, because my average line around 60 is definitely capturing 2020, but then it definitely drops in 21, and then 22 it does pick up quite a bit, and then it came crashing back down. So not too much activity in the more recent times. So we'll kind of watch this one as we go. In terms of like a sell point, it looks like this is pretty accurate. It's capturing some resistance points back in uh, early second quarter 21, and then late second quarter 22, and then most recently, just back in February, it acted as a resistance line. And now it's dancing around that line. So Uh, in terms of like a sell point, I marked it out at 142 and it's at 140. So this one looks like it's a time to sell this one. So that is going to be on notice. We're going to plug that in as a time to sell this one. And then our final trend line, we're making this one blue. This is going to be what I consider would be like a fair value point. This one, this one kind of seems like 132 is the mark. Uh, and I'm just basing that off of it kind of danced around this line for a couple months in early 21, then mid 21 for a couple weeks. More recently in 22, it kind of played around that line for about May to July, came back again around that mark in September of 22, again in November to December of 22, and now it's playing around that line in like February. So that seems to be a fair marker. If you can get it around 132, it's not bad. And the fact that it seems to be, at least most recently, like today, it seems like it wants to dance above that line. So if you can get at 132, that's like the first time I would consider buying it. And then, of course, close to 123, I think it's more likely that we would want to buy that. So that's how I see it right now. This is the one we were just tracking, XLK. I put it in red because that is something that I'd be interested in selling or shorting in. Um, the reason I may not do that is only because there's not much profit margin. So, like, for this one, for me to even kind of consider this one kind of worth it, because it's the largest potential would be like $20 in a swing. Uh, not unless I was buying at least say like 5 shares of this, so that I could make $100 per swing. Maybe it would be worth it then. Uh, but then, of course, the added kind of factor is it's more likely to kind of bounce at 132. And so now you're talking like a $10 swing. And for me to kind of make it worth it, I would want like 10 shares. Like, I'm looking for swings of like $100. I feel like that's kind of worth it. Um, I could kind of, you know, pinch pennies here and look for $5 trades, $10 trades, but I feel like $100 is kind of like a nice mark. But maybe I just need to lower my standards a little bit, drop it down to say like $30. I think 30 is kind of a good mark for me. So I will take that to consideration as I look at this deeper. But that is kind of where I stand tonight. At least right now, is I would consider selling or shorting this one very soon, if not right now, and waiting till it drops to at least like 130. And but yeah, let me know your thoughts on this. And of course, please like, subscribe, and I'll see you in the next one. Bye.